Hello, good morning, ladies and gentlemen. Good morning, good afternoon, good evening, depending on whichever part of the world you are tuning in from. It's Happy Friday, the last trading day of the week, and in fact, I am so excited to welcome you to yet another promising session on the X Trend Speed Live. Well, before we kickstart the session, I would like to confirm that we are good to go this morning. So let me know if you can hear me clearly. You can see my screen clearly by typing I in the comment section, as this will give me a positive feedback that we are good to go. And if there are any issues with the audios or visuals, please feel free to let me know in the comment section, as this will help me to know and of course do the appropriate adjustments so that we can have a better experience out here. So let's see, I would like to see some feedback, please. So let's see what we have in the comment section. All right, so I can see Jayad, okay, Junior Yad, all right. I can see Foster Lim, 6716 Michael SP, good morning to you. Thank you, Hall. 6183765. Ramona 85, good morning to you too. 6422. Papa 34. I'm also seeing Hey Carrie, good morning to you, Carrie. Happy Friday to you too as well. And I'm glad to have you around with us this morning too. Masiek92, good morning. 5409, good morning to you. Thank you very much, guys. So I would like to take this as a positive feedback that we are good to go this morning. So my own name is Sharif Daramola, and for the next 1 hour, I'm going to be your host, where we shall be deliberating on the current market structure together, taking you through on a trading journey where we shall be dissecting the chart from a comprehensive price action based technical analysis. Well, in preparation for today's trading session, I have already conducted a comprehensive price action analysis on all of the financial assets on our watch list. And in fact, I am very eager to share with you my discoveries as to what we are going to be doing on our positions, and at the same time, how we are going to strategically position ourselves ahead of today's trading session. As always, our analytical approach will focus on powerful parameters such as the use of trend lines, key levels, and of course chart patterns to uncover valuable insights into the historical price movements of all the financial assets on our watch list. So far this week, we have been working on the US All Spot, the USTech 100, popularly known as the NASDAQ, the GBPUSD, and of course the XAUUSD, popularly known as the gold spot. And we've been doing pretty well in the last 4.5 days. And today's quite an interesting day, considering the economic event we are looking forward to today, and of course, the one that has happened, which of course is going to be having a major impact on price movement. Then, coupled with that, is the fact that today is the last trading day of the week, and we all know last trading days like this always have these technical expectations, as participants who have taking advantage of a significant move in price action in a particular direction are likely going to be doing profit taking activities ahead of the weekend. And of course, this will normally reflect on the chart as a reversal setup. So we are going to be taking all this into consideration while we review our current positions in the market. For those who are joining us for the first time, I didn't forget you guys. You're welcome. I'm very, very glad to always have newcomers in the house. And you might be asking that, what are we doing here? Well, what we simply do is to come together, as a community in anticipation of the New York session, where we come and review our positions and how well we've been doing so far, and at the same time strategically position ourselves ahead of the New York session. So we do this on a daily basis, 10 a.m. UTC, 11 a.m. West African time. And one thing I would like to say here is that the more time you spend with us, the better you get to understand how this works and eventually be able to use the information you have gathered here to make your own independent trading decision. So once again, you are highly welcome on board. So with the groundwork laid, let's dive right into the business for today. And as usual, the first thing we normally do is to check on the economic calendar, as we all know how these fundamental factors often manifest on the chart in technical patterns and price movements. And by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and, of course, specific technical patterns. And using this information, we can position ourselves strategically in such a way that we can catch any potential move prior, during, and even after this event. So for today, Friday, August 11th, the last trading day of the week, we have three high impact events coming in from both the UK and the US economic docket. So for the UK economic docket, we have the gross domestic product annualized for quarter two, which happened earlier this morning, I think about 4 to 5 hours ago. And the gross domestic product is released by the national statistics, and it is a measure of the total value of all goods and services produced within the UK economy. And this is considered to be a broad measure of the health situation of the United Kingdom's economy. And generally speaking, a high reading is considered as positive for the for the pound sterling, while a low reading is considered negative. Now, if we look at the previous data for the last quarter, we saw here that we had a 0.1% and 0.2% respectively for the quarter on quarter and for the year on year. And from both consensus, economists were projecting a figure lower than the previous data or almost the same. But what we got this morning was phenomenal, as we saw the data came in beyond expectation, giving us a positive deviation at each instances. Now, we are going to be looking at how the pound sterling has reacted to this market, to this data. That is our market participants in this data in this market has reacted to this data. Of course, since last week, we have been expecting a surge in the pound sterling, especially after the interest rate hike, but we are yet to see any significant traction in the favor of the pounds. And I'm of the opinion the reason why we have seen a range-bound activity since the beginning of the week in the GBPUSD market is simply because of this data that majority were looking forward to see how well the US economy is. And of course, we also have other events that could also drive price movement for today. So the next one is the producer price index, which is coming up in about 2 hours from now. And the producer price index the producer price index is released by the Bureau of Labor Statistics, Department of Labor, and this index measures the average changes in prices in primary markets of the US by producers of commodities in all states of processing. So this is another high impact event, which of course a high reading is considered positive for the US dollar, while a low reading is considered negative. Now, if we look at the previous data for the month of June for the year on year, we saw 2.4%, and economists are projecting a 2.3% today. So we are going to be looking forward to what the actual data is going to be on that one. Then finally for today, we have the publication from the University of Michigan. So that is the Consumer Sentiment Index, which is released by this university, and it's a survey of personal consumer confidence in economic activity. In fact, this data here shows us a picture of whether or not consumers are willing to spend money. So, generally speaking, a high reading here also is considered to be positive for the US dollar. Now, if we look at the previous data for the month of July, we have 71.6, and consensus are projecting 71 for the month of August. That's a sign that there is a contraction thereabouts. So we are going to be looking forward to what the actual data is going to be on that one too. Now, as technical traders, what we are going to be doing is to sniff the market structure using our key simple parameters such as trend lines, key levels, and chart patterns to uncover valuable insight into the current market structure so that we can position ourselves ahead of this event. And we all know that this anticipation of this event normally reflects on the charts as price action. So with that being said here, let's dive right into the chart where we shall be looking at things from a technical standpoint. So the first asset on our watch list for today is the US All Spot. Now, on the US All Spots, so far this week, we have been doing pretty well on this asset as we have bought, we have sold, and we have sold again on this asset, giving us significant amounts of profit. And for the sake of clarity here, I would like to run through how the week started for us and what incited the idea, the decisions we made throughout the course of the week. So at the beginning of the week, we noticed our price action started on a bearish note. And in fact, before the bearish momentum, we saw this range here where price was initially confined within the $82.85 level and the $82.20 level to give us a flat channel to work with. Then in addition to this range was the barrier we saw around the $82.85 level that despite the very strong bullish momentum we witnessed last week, we saw a barrier here where sellers negated all attempt by the buyers to break out of this price level. We saw the same thing happen during the early hours of this week, giving us a sign that we could have a transition into a reversal pattern in the form of a double top structure. And when we took into consideration the previous impulse leg, we saw a double top structure which we were supposed to use to guide our trading activity at the beginning of the week. And you know how we do it in this community. Whenever we sight this kind of reversal pattern, the next thing we want to be doing is to identify the neckline which we will be using to validate that reversal pattern. Coincidentally, the neckline here shares a confluence with the support line of the range we identified earlier. So we were looking out for the breakdown retest of this neckline to give us an opportunity to sell. And prior to our live session, I told you on Monday that I already had a sell position and that for those who missed out on that opportunity, you want to see price come back to retest the structure to incite a downtrend scenario. And this was exactly what happened. We saw price breakdown, came back to retest the structure to give us our first sell position for the week in this community. Now remember, we also added one more position at the breakdown of the $81.52 level. So at the beginning of the week, we were able to scoop in over 400 pips before the bullish momentum began. So it was quite a very positive start to the week for us all in this community. Then on Tuesday, we talked about how important the $80 level is, that the sell position that we took advantage of on Monday, we need to see how it would react to that level to decide if we are going to be adding more sell position, and if the appearance of buy pressure resumes around the $80 mark, we shall be joining a trend continuation to the upside. And I went on to further buttress the importance by emphasizing the impulsive move here that broke out of the $80 mark on Thursday's trading session of last week, and that price is likely going to come back, retest the structure to incite an uptrend continuation, which is exactly what happened. And giving us that privilege, we joined that move to the upside, riding on that trend as price broke out of the key level at the $82 mark. We added more positions at the breakout of the $82.85 level and of course the $83.50 area. Now, during our live session yesterday, we had a simple setup here that we said after noticing the continued selling pressure around the $84.28 level that we will need this ascending trend line to guide our trading activity, and that if the selling pressure persists, a breakdown retest of this trend line will be welcoming a sell position for us. And this was exactly what happened. A couple of hours into the New York session, we saw the breakdown of the ascending trend line, breakdown retest of the $83.50 level, which triggered our second sell position for the week. And in fact, price moved over 160 pips on the first position. And remember that we said we will be adding more positions at the breakdown of the $82.85 level, which also moved over 100 pips. So we were able to scoop around 200 pips on that two positions there before the buy pressure resumed in this market. And if you had moved your stop losses accordingly, like we always say in this community, you must have been taken out with a modest size of profit. So far so good this week. It has been a phenomenal week for us as we were able to scoop in over 600 pips across board on the US All Spot market for this week. So I would like to say congratulations to everyone who has been part of this profitable journey. So with that being said here, what is going to be our plans for today, and how do we intend to capitalize on this move? Are we going to be seeing a downtrend continuation here, or is price action going to begin the second wave of bullish momentum that started on Tuesday? Now, to identify our potential trading opportunities, so what I did here this morning was to take into consideration the nature of price action since the later part of the New York session yesterday, and this was what I was able to come up with. Now remember the importance of our key level. Remember that we had our key level situated at the $82 area, and in fact this level has been a major determinant of price action whenever price comes within that zone. We saw how this level was a strong selling niche on Wednesday of last week trading session. We saw price break out of the structure here. Then we saw selling pressure again happened here at the beginning of the week. And since price broke out of the structure on Tuesday, price has remained above that level. Now, price broke out. And from a technical standpoint, whenever we cite a breakout of a key structure, such as our key level here, price is likely going to come back, retest the structure to incite an uptrend continuation. Now, in addition to that, you know how we use our key level in this community. As long as price action remains above our key level, we have no business selling, as we want to be looking out for patterns and structures that will support the idea of buying that asset. Now, if you look at since the later part of the New York session yesterday, it's quite interesting that as soon as price got into the zone, we begin to see buy pressure resume around this area. And in fact, this has lasted over 10 hours here. And in the last couple of hours, all at 10 by the sellers to break through the $82 level has been met with strong rejection from the buyers, giving us sign that we might likely be seeing a reversal pattern here that might incite an uptrend continuation. Now, in addition to this observation is this descending trend line I was able to spot here this morning after connecting the series of lower highs that began in the last 24 hours. Now, what you will see here is a couple of breakouts and retest of that descending trend line, which is a clear sign that the trend line may no longer have the capacity to continue to negate that bullish attempt, hereby making the idea of buying the US oil spot a little bit much intense. Now, with this situation here, you will see that we are caught within a range right now between the $82.85 level and the $82 area, which is going to be our center of focus for today. Now, depending on how price action reacts to the zone will determine where price action will be going for today. And you know how we do it in this community. Whenever we have a beautiful flat range like this, all we want to be doing is to remain patient and wait for a breakout of the resistance line to give us a buy opportunity, or breakdown of the support line to give us an opportunity to sell. Now, with this situation here and coupled with the observations I just showed you here, we had buy pressure around the $82 area. This level was broken on Tuesday, giving us a breakout of structure, price coming back to retest the structure, and in fact we also have a breakout retest of that descending trend line. I'm of the opinion that price action may likely be going to the upside, and in that regard I'm going to be having a buy stop order above the $82.85 zone level to capitalize on this uptrend continuation. Now, this is how we are going to be capitalizing on this move. Now, for those of us who are profitable so far this week on the US oil spot, then we can afford to leverage on the profit we had made so far this week to test waters around the $82.85 level and see if the buy position there will click. So for those who are profitable, we can afford to have a buy stop order above the $82.85 level. However, if you are going to be joining us for the first time today, that is, this is your first position you will be taking on the US oil spot, then it is necessary that you wait for confirmation since you have nothing to leverage on, since you are not part of us since the beginning of the week. So what you will be doing here is to wait for a breakout of the structure to happen, then scale down to your lower time frame, let's say the 5, 10 or 50 minutes time frame, to look out for signs that sellers are finding it difficult to stay below the $82.85 level, which of course will reflect on the chart as a retest of structure and multiple buy pressure below, around or above the $82.85 level to capitalize on an uptrend move. Now remember, we have very important levels here that we can use to maximize the potential of this bullish move. So we have levels at the $83.50 level. We also have at the $84.20 area, where a breakout retest of the structure will be welcoming more buying opportunities. So this is how we are going to be buying on the US oil spot for today's trading session. However, if price action drops below the $82 area, then we are going to be getting ready to join a bearish momentum. Now remember, this is our key level. So for us to join a sell move here, considering the fact that price has been bullish for the last 6 to 7 weeks, it's very necessary that we wait for confirmations to happen before we jump into that sell position. So as soon as we have the breakdown of the $82 area, we would wait for a retest of structure to happen on our lower time frame before joining that bearish move to the downside. I doubt if this will happen today, considering the strong signs that buyers are gradually taking over this market. But if it does happen, we want to be on standby to capitalize on that move. So these are my views here on the US oil spot for today. So our center of focus for today is simply between the $82.85 level and the $82 area, where a breakout or breakdown will be welcoming trading opportunities. So let's mark out these levels on our chart, as we will be needing them as a reference point to guide our trading activities for today. So if you have any questions whatsoever as regards to this current setup, feel free to let me know in the comment section. Trust me, I am here and willing to be of help in that regard. So I will be taking the next 10 to 15 seconds to see if there are any questions whatsoever before we move on to the next instrument. All right, so I can see a handful of comments here. I see a lot of highs. Masic 92409 4114 Sebit Tudora. Good morning to you all. And I see 8603. Good morning to you. Ahmed X Trades. Good morning to you too. 947 Chakra Centers. All of you, you are so wonderful this morning. Thank you for checking in on us here. So, in the absence of no questions, I want to assume that we are all on the same page. So, we shall be moving right into the next asset on our watch list for today. So the next instrument on our watch list for today is the USTech 100, popularly known as the NASDAQ. Now, on the NASDAQ, on the USTech 100, we've had quite interesting scenario here since the beginning of the week. And in fact, in the last 24 hours, we were able to scoop in some modest size of pips on this one. So I would like us to run through how the week started for us here on this asset, after which we are going to be deliberating on how we will be positioning ourselves ahead of today's trading session. Now, looking at the structure, let's see how the new week started for us. Now, at the beginning of this week, we saw our price was initially caught within a range between the 15,360 and the 15,285. This was initially what happened. Then we saw an extension of that range. So the range widened a little further to capture the key level, which was situated at the 15,400. And you know how we use our key levels in this community. As long as price remains below the key level, we want to be looking out for patterns and structures that will support selling opportunities. Now, if you look at our key level for this week on the USTech 100, you will see it is situated at the 15,400, and throughout this week, price has remained below that level to further emphasize the strength of the sellers in this particular market. Now, in addition to that key level are these couple of trend lines after we connected the series of lower highs, as you will see, and price has remained below those descending trend line, which also further buttresses out the characters of sellers in this market is at this point in time. And as a result of this observation, we were able to capitalize on a selling opportunity right here on Tuesday after citing the breakdown of that ascending trend line we spotted on Monday, giving us an opportunity to sell. Though we sell that, we sold right there. I think we had one position there with 130 pips, and we also added one more position at I think we had at 15,325. So we were able to scoop over 200 pips on that single one. Then right here on Wednesday, we anticipated a retest of the ascending trend line, which was broken, and in fact we saw a couple of rejection here, which made us to join another sell opportunity below the 15,325, as you will see, and we had two positions on that one. The first one was here. We also had the second position at the 15,285 to maximize the potential of this bearish move. So we were able to scoop in how many pips on that one. Let's see. We had 240 pips on the first position, while we also had it about 190 pips on the second position, giving us over close to 500 pips on that one too. So for the first half of the week, we were able to scoop in close to over 600 pips on the US Tech 100. And for those who are part of this, well done to you guys for being on standby to capitalize on that move. And during our live session yesterday, we identified a new setup where we had this ascending trend line figured out that's been holding some bullish momentum. And we said to buy here, we will need price to break out of the 15,225 level, which of course did a couple of hours into the New York session yesterday. And we saw the significant move in price as price moved over 130 pips in our favor before we saw that bearish move. And in fact, if you had moved your stop loss accordingly, like we've always been preaching in this community, that whenever price moves significantly well in our favor, we want to be moving our stop loss. If you had done that, you would have been taken out with a modest size of profit before that bearish move came in. Then we went on to see the breakdown of the ascending trend line here, which was part of our expectations yesterday. Of course, we said that trend line will continue to guide our trading activity, and that if we sight a breach of the trend line to the downside, we shall be capitalizing on that move to join a bearish move. And as you see what happened here, we were part of that bearish momentum. And if you had done that, you will currently be running with 80 pips in profit if you still have a sell position at this point in time. So well done to you for being on standby to take advantage of this opportunity. So at this point in time, if you still have your sell position running, the worst case scenario here is to move your stop loss to break even. Let's see how the market will react below the 15,175 level. Now, with a well-secured position at this juncture, what is going to be our plans as we get prepared for the last trading day of the week? Now, considering the fact that today is the last trading day, we might likely be seeing some profit-taking activities. We saw how the US Tech 100 have been sold most part of the week, and we might likely be seeing a bullish momentum. And one thing I would like us not to ignore here is this descending trend line. So I would like to extend this trend line a little further so that it can capture the future price action in this market. So remember, at the beginning of the week, we were able to spot a series of lower highs, which we of course connected to help us guide this bearish momentum, as you will see here. Now you know that as long as price remains below this descending trend line, we have no business buying this asset at any point. Now with this situation here and price remaining below the trend line, how do we intend to capitalize on any trading opportunities today? So one of the things I will be looking at here is this. Now, the first thing I want to note here is the lowest point which price has been for this week. That is the $15,070 area. So I will need price to break down the structure to further give me a good sign that we can join a bearish move to the downside. And of course, price still remains below that descending trend line around that area, which makes it promising to join a bearish move. However, if at any point in time today we witness a breakout of that descending trend line, which also shares a beautiful confluence with the 15,150, then at this point we will start considering buying. Now look at what has been going on since price action tested the 15,070 during the later part of the New York session yesterday. We saw buy pressure resume around that area. And in fact, in the last 2 to 3 hours here, we have noticed another sign of buy pressure resuming around the 15,000 and $70 area. Now, with this situation here, it begins to increase the potentials of buyers here. So if price action finds it difficult to break down the 15,070, we might likely be seeing a bullish momentum and in fact see price action transition into what may look like a double bottom structure to inside an uptrend continuation. Now, what I'm going to be doing here to join a bullish move, that is, if price action finds it difficult to find new lows or break down the 15,070, I want to be positioning myself above the 15,150 to capitalize on an uptrend move. Now, if price breaks out of that 15,150, it would have also broken out of that descending trend line, which will have been a beautiful sign that the trend line may no longer have the capacity to continue to negate that bullish attempt. And if that is going to be the case, it will be a sweet spot for us to join a bullish move. Now, for those who are profitable so far this week, you can afford to have a buy stop order anywhere above the 15,150 to capitalize on this bullish move. However, if you are new with us and this is your first time taking a trade on the USTech100, so you are coming in from a clean slate, then you would want to wait for the technical structure to mature before you jump into the position. And one of the things you are going to be looking out for is, first of all, sight a breakout of that trend line and the 15,150, after which you want to scale down into your lower time frame to look out for signs that sellers are finding it difficult to stay below the 15,150, which of course will reflect on the chart as price retesting structure coupled with buy pressure, after which we want to be joining an uptrend move. So this is how we are going to be managing our trade on the USTech 100 today. So simply put, today our center of focus is between the 15,150 and the $15,070 area, where depending on how price action reacts to this range will determine the direction of price action for today. So you do want to be marking out those levels on your chart, as you will be needing them as a reference point to guide your trading activity. So that is that on the USTech 100. If you have any questions whatsoever, feel free to let me know in the comment section, and trust me, I am here and willing to be of help in that regard. So I will be taking the next 10 to 15 seconds off to see if there are going to be any question, and you can as well use that time to mark out those levels on your chart, as you will be needing them during the New York session. Okay, so I see your comment, 7663876. Good morning to you. Glad to have you around with us. And you are asking, will the USD JPY fall? Well, USD JPY is not part of our instrument for this week, but I'm beginning to see some selling pressure resume around that area. So if we do have some time, we could look at it together. Please let me know towards the end of the session if you're still around, so we can look at it together on that one. So with that being said here, and in the absence of no questions, I want to assume that we are all on the same page. So I will be moving right into the next financial assets on our watch list. So the next instrument on our watch list for today is the GBPUSD, the cable market, and we have a very indecisive phase throughout this week, as we saw our price action kept on trading between the 1.279, as you will see here, and the 1.2700 area since the last Friday of last week's trading session to further emphasize the level of uncertainty in this particular market. And as a result of this, I missed out on the sell position that happened yesterday. Sincerely, remember I told you yesterday that as long as price action remains within that range, I would remain patient waiting for significant confirmations before we can jump into any position. And one of the signals we are looking out for is either a breakout retest of the resistance line for an opportunity to buy, or the breakdown retest of the support line to give us an opportunity to sell. However, we had some couple of positions during this range during the week. Remember, we had a buy position here, which gave us about 40 pips thereabouts. We also had sell position here, which gave us about 30-40 pips or so. We also had sell positions here too as well, which also gave us about 30 pips or so on that one. So you will notice that we really have not seen any significant traction in the GBPUSD market. And if we look at this from a fundamental aspect, there are two ways to which I've looked at this morning while trying to decipher what to look out for today. The first one is the fundamental aspect, which remember last week we witnessed the interest rate decision from the Bank of England, and we witnessed a 25 basis point rate hike, which of course should favor the pound sterling. And if we compare the interest yield between the pound sterling and the US dollar, you'll see the pound sterling is has a higher return on investment, considering the interest rate, which is at, I think, pegged at 5.5% right now, and the dollar is pegged at 5.0%. So that margin enough is an attractive window for investors to come in. But instead, the contrary has been happening here, as we yet to see that significant traction in favor of the pound sterling. And one of the reasons why I think this is going on is simply because of the fact that we were looking forward to significant economic features from both the United Kingdom and the United States for this week, which has resulted in that huge consolidation phase we observed throughout this week, making price action trapped within that range. And one of the events already happened this morning, and that is the GDP data, which came in beyond expectation, giving us a positive signal that there was an expansion in the United Kingdom's economy, which of course should give a positive traction to the pound sterling. But we are yet to see that. After the event, we saw this bullish traction. Of course, we saw a huge bullish traction here that broke out the 1.27 a little bit, but we've been seeing some selling pressure around this area, which emphasized the level of indecision at that point. And this could be as a result of the anticipation of the producer price index and the consumer confidence index, which is coming in from the United States in about an hour or so from now. So I think participants are looking forward to that event. But one thing for me personally, looking at things from a technical standpoint, I have a strong feeling that we are likely going to be seeing a bullish move from this current structure. And the reason why I'm saying this is this. Now look at, despite the breakdown of that key level at the 1.27 area, you will see that the bearish momentum didn't really there was no build up to push that price to the downside, as we saw here that as soon as price got into the 1.26700 area, we begin to see buy pressure resume around that area in anticipation to the GDP data. And when the GDP data came in beyond expectation, we saw that engulfing bullish candle breaking out of the 1.27, and price action since then has remained around the 1.27. Now, for me personally, I already have a buy position triggered above the 1.27 area. So this is where our center of focus is going to be for today. So we have a range between the 1.27 and the 1.267 area. And if we look at things from a technical standpoint, you know how we do it in this community. Whenever we have a simple flat channel like this, we want to see price action either break down the support line to give us an opportunity to sell, or break out of the resistance line to give us an opportunity to buy. Now, with this situation here, I told you I have my buy stop order above the 1.27. I have a very strong feeling that we will be going very bullish for today, no matter regardless of what the data will be from the United States. Let's see how this will play out anyways. I feel confident above the 1.27 area. So anywhere above the 1.27 seems very appropriate to look out for buying opportunity at this point in time. And please ensure you have your stop losses in place. Very, very important. So you can have your stop loss below the previous low, anywhere below the 1.268. So you would have a stop loss dovetailing to about between 20 to 25 pips on this position, and let's see how far this bullish momentum will go. Now remember that we have very important levels as well, which could also give us the privilege of maximizing the potential of this bullish move if price action ever breaks out of these levels. Now one of them is the 1.27435, which of course a breakout retest will welcome buying opportunities. Then we also have the 1.27640 and of course the 1.27900 area. So all these levels, you want to be marking them out on your chart, as you will be needing them as a reference point to guide your trading activities for today. So this is how we are going to be buying the GBPUSD for today. So on this one, I'm leaning onto a bullish momentum here, and I will only consider selling if price action breaks down the 1.26700 level to the downside. That is the only condition that will make me want to sell. But I think I can find higher lows here. We're beginning to see higher lows in favor of the buyers. So if I connect the series of higher lows here, we should have an ascending trend line, which we can of course use to guide our trading activity for today. And what this simply means is that as long as price remains above this ascending trend line, we shall feel comfortable in our buy position. And if at any point price breaks down the ascending trend line, then we'll begin to start considering selling opportunities if buyers find it difficult to climb back above the 1.270 area, then maximize the bearish move by adding more position at the breakdown of the 1.267. So this is how we are going to be managing our position for today. So you do want to be marking out these levels here, as our center of focus for today's trading session is basically within that range, within the 1.27 and the 1.267 area. So these are my views here on the GBPUSD for today. If you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds to see if there are any questions before we dive into the last instrument for today. A problem destroyer, good morning to you. It's been a while since I saw you. Trust you are doing very well. It's been a while since I saw you around. Glad to have you around once again. All right, so in the absence of no questions, I want to assume that we are all on the same page here. So let's dive right into the last financial asset for today. So the last instrument we are going to be taking for today is my favorite. That is the XAUUSD, popularly known as the gold spot. And on the gold spot this week, we've been selling actually, though we had a position at the beginning of the week. Remember, we had a buy position triggered on the 50 minutes time frame. For those who have been with us since the beginning of the week, remember we had a 100 pips move around this area. We capitalized on this move before we begin to notice lower highs in this particular market. And of course, we were able to connect the series of lower highs to give us this descending trend line, which of course has been guiding our trading activities throughout this week. And of course, as long as price remained below that descending trend line, we had no business buying the XAUUSD. So we had kept on selling. We sold at the breakdown of the 1930. Remember, we sold here again on Wednesday, and of course we sold again around this area on that same Wednesday, again giving us about 120 pips thereabout. Then during our live session yesterday, we begin to see an interesting setup gradually unfold on this chart. And one of the key things we saw here was this impulsive move that happened on Wednesday. We took that into consideration. And as soon as price got into the 1,914 zone, we begin to see buy pressure. Then I was telling us yesterday that we might likely be seeing a retracement of that impulsive bearish move that happened. That is, price might retrace back into an area. So we used our Fibonacci retracement tool to identify a golden zone area which falls within the 50 and the 78.6% of the previous impulse leg, hereby giving us a sell window around the 1,928 and of course the 1,924 area, where I told us yesterday that we shall be looking out for reversal patterns to join the bearish move. Now, in addition to this observation, we also talked about the potentials of buyers that we said if price breaks out of this descending trend line, that we might be getting ready to buy. And in fact, since I was profitable on the XAUUSD this week, I had a buy position triggered, which unfortunately I was taken out in a loss on that one before I joined this bearish move, had the breakdown retest of this ascending trend line we spotted here during our live session yesterday. So it has been quite a roller coaster of buys and sells this week, but we were still able to stay afloat with some reasonable amount of profit on this one. And for those who have been part of this journey since the beginning of the week, well done to you for being on standby to have capitalized on these trading opportunities. Now that we're going into the New York session today, what is going to be our plans? What is our expectations as regards to this current market structure? So personally, I already have a buy position, and I've of course moved my stop loss to break even on this one. So I will be sharing with you why I have bought and what I think you can do around the structure. Now, the first thing I want us to observe is the fact that price still remains below that descending trend line we spotted at the beginning of the week. Remember, so let me just highlight it out here and leave it there so that we can continue to see how important this trend line is for us today. Now, looking at the structure here, one thing I observed this morning while trying to decipher where price action will likely go is that as soon as price got into the 1,912, we begin to see buy pressure resume around that area. And in fact, this led into higher lows, which of course, whenever we see higher lows in the market, it's a clear sign that buyers are gradually gaining momentum behind the scenes. Then, in addition to the situation here, I'm beginning to notice a potential reversal pattern in the form of a double bottom structure. So you saw the first touch here, and the inability of price action to break down the previous low here was good enough for me to consider this to be a potential double bottom structure. And you know how we do it. Whenever we identify a potential transition of price action into a reversal pattern, the next thing we want to be doing is to identify a neckline which we were going to be using to validate the reversal pattern. So we are looking forward to a breakout of that neckline to confirm that now we can be part of an uptrend move. So this was simply what I saw here this morning. So what this simply means is that our center of focus for today is going to be within the $1,916 level and of course the $1,912 level. Now with the breakout of the 1,916, I had my buy position triggered here with the hopes that price action will continue to the upside. And for those who took advantage of this opportunity, well done to you for being on standby to capitalize on that move. Now, for those who had missed out on these opportunities, well, there are two ways to which we can take advantage of this move. Now, one of it is this. Now, I was able to connect the series of higher lows here to give me this ascending trend line you'll see on your screen right now, which of course we are going to be using to guide our trading activity for today. So as long as price remains above this ascending trend line, we shall feel comfortable in our buy position, while we also look out for more opportunities to buy the XAUUSD at this juncture in the market. So since we have a breakout of the 1,916, there is still a likelihood that price could still come back to retest that structure to give us an opportunity to join that uptrend continuation. Now, if price action goes on to break out of the $1,919.50 level, which also shares a confluence with that descending trend line, then at this point in time, I want to be thinking of adding more position to my existing trade, as the breakout of that descending trend line will be a clear sign that the trend line may no longer have the capacity to continue to negate that bullish momentum. So if that happens, we'll continue to buy. Then remember, we have levels such as the $1,922.50 level to capitalize on more buying opportunity. We also have the 1,925 level to add more position, and of course we have the 1,930 if price action gets thus far to add more position to our existing trade. So this is how we are going to be buying the XAUUSD for today. So you want to mark these levels out and see how important both the ascending trend line here and that descending trend line is to this current market structure. Now, in as much as we're looking out for buying opportunity here, you know how we do it in this community. We also want to keep tabs with the opposite direction too as well. So what happens here if sellers come in? What do we want to see on this chart that will make us feel comfortable to sell the XAUUSD? Well, it's quite simple. So we already have this ascending trend line here figured out. So we will need price to break down the ascending trend line to give us a sign that we might likely be going bearish. And in fact, the ascending trend line also shares a confluence with the $1,916 level. So a breakdown of both the 1,916 and the ascending trend line would be all we need here to get ready to sell. And we scale down to our lower time frame, multiple retest of the structure will further confirm that truly we can go bearish on this one. Then a further breakdown of the 1,912 will welcome more selling opportunities. But at this point in time, I doubt if that will happen actually. But if it does happen, we want to be on standby to capitalize on that move. So at the moment, I'm holding on to a bullish bias, and anything above the ascending trend line and the 1,916 is all we need to feel comfortable in our current buy position. So these are my views here on the XAUUSD. So let's see if there are any questions whatsoever before we draw the curtain for today's trading session, and of course for this week's session on the X Trend Speed Live. So I will be taking the next 10 to 15 seconds off to see if there are any questions, and you can as well use that time to mark out those levels on your chart, as you will be needing them as a reference point to guide your trading activities for today. So I see a couple of comments here. Tema73, good afternoon to you. Glad to have you around. Tema, are you new with us? I think this is my first time seeing you. Problem Destroyer says hello. All right, hello to you too. And I see your comment 73233. Good morning to you too as well. So, in the absence of no questions, I want to assume that we are all on the same page here. And in fact, it has been a wonderful moment with you guys today. And throughout this week, we've had interesting scenarios, interesting setups, interesting trading opportunities, which we, of course, took advantage of. And congratulations to everyone who has been part of this profitable journey since the beginning of the week. And I wish us all the best of luck today as we get prepared for the New York session. I do hope, I'm very confident that we are well equipped to be able to take advantage of any potential trading opportunity today, as we are able to simulate all the potential trading opportunity that could come up on the US All Sports, the USTech100, the GBPUSD, and of course the XAUUSD. And I do hope you marked out these levels on your chart, as you will be needing them as a reference point to guide your trading activity for today. So on this note, I would like to call it a day here. I see your comment, Aki88. Thank you very much. Trust you are doing very well today too. For those who are joining us for the first time, I hope you are able to gain one or two things from what we discussed here today. But trust me, the more time you spend with us, the better you'll become in understanding how things works here, and eventually be able to use the information you have gathered to make your own independent trading decision. So it's on this note, I wish us all the best today. And I wish you all a wonderful weekend. And at the same time, look forward to seeing you same time next week, Monday, when we shall be coming back here to have a fresh new look at the financial market. Thank you, Aki88. Thank you, 88. And do have a wonderful day, everyone. So I look forward to seeing you again on Monday, 10 a.m. UTC. 11 a.m. West African time, as we come here again to review the financial market as we position ourselves for the new week. Do have a wonderful evening, everyone. Bye bye.